Hello, this is Ed Burke with PlaceForTraders.com for Tuesday, February 24th. Starting off in the March S&P, and last night's video, I was talking about the level of 767 to give us our direction for the market. If we're trading higher than 767, it's bullish. Lower than 767 should signify a bearish day. Going back to Sunday evening and early Monday morning, the March S&P had rallied. It actually overnight before the stock market opened Monday, the March S&P had traded over 786. Our first line of resistance in the March S&P for the daily session was 782. So we've seen quite a jump in price overnight before the stock market opened. Now after the stock market opened, the March S&P had traded as high as 778 and then continued to trend lower or sell off all day long. Now when the market opened up, it was trading at 778. You're in between the first line of resistance at 782 and the pivot of 767. Now, when the market pulled back down to 767, it was clear early on there wasn't much support there at 767, and the market was taking a new direction, which was bearish. Sometimes you're going to have days like that where the market is just going to look like one thing early in the morning and something entirely different later on in the day. That's why it's important to have a guide or a method that you're actually analyzing the markets with. If markets just trended all day long in one direction, that would make things a lot easier. So having said that, when we blew through 767, our first line of support was 754. Not much support at 754. It went to 754, bounced up to 757.5. Ultimately going as low as 740. The low was 740 in the March S&P. Our second line of support was 741, so it actually went right down to our second level of support, and then it closed at 745. Looking right here, that was today's candle. That was today's action. We from the high overnight from 786 down to the low of 740. That was a 46-point swing in price. So a wild day. Looked bullish early on, turned decidedly bearish after the open, and just continued to sell off. If looking at this daily bar, what I have here in the blue is called the parabolic SAR, or stop and reverse. This market, according to the parabolic, doesn't give a buy signal until this market right now goes up to around 830. So today's close was very bearish. We're looking at the numbers for tomorrow being 756 is our pivot. If we're staying lower than 756, that you can look for a continued downtrend. Higher than 756, we could have a bounce in price. First line of resistance 768. Second line of resistance 781. First line of support 731. Second line of support 724. Couple numbers that are coming out at 10 o'clock Eastern, 10 o'clock a.m. Eastern time. You have the consumer confidence number, and you have Chairman Bernanke with his semi-annual monetary policy report. Those are both at 10 a.m. Eastern time. If you haven't already gone to my website, go to PlaceForTraders.com. Sign up for our free emailed alerts. We give recommendations when the markets are trading, email to you. It's totally free, no obligation. Go there, get yourself signed up. Thanks a lot.